Is your practice a high-income job or a true wealth machine? The difference is having a financial blueprint. What if some dentists are legally saving over $300,000 a year, pre-tax, for retirement, far beyond a typical 401k? This isn't a loophole. It is one part of a financial system designed specifically for practice owners like you. A blueprint that also finds major tax savings in your real estate and finds revenue from procedures you already perform. In the next few minutes, we'll walk through this plan. Radical tax optimization, maximizing profitability, and building real wealth. Let's begin with taxes. Is your CPA a historian for last year's numbers or an architect for your future? The shift is to proactive planning. Your planner will immediately point to big wins like Section 179 expensing. It lets you deduct the full price of equipment in 1 year. Then there's bonus depreciation, letting you write off 80 to 100% of assets instantly. Think CAD/CAM systems, creating massive deductions. Beyond big items, don't miss the basics: business vehicle costs, meals, and continuing education. These are legitimate write-offs. But a truly sophisticated strategy is owning your practice's real estate. This is a massive tax-saving vehicle, not just a way to avoid rent. Cost segregation studies apply bonus depreciation to parts of the building itself. Cabinetry and HVAC can be written off immediately. Aggressive tax reduction is one part of the fight. But what if you could significantly boost revenue without adding a single new patient? The answer is in maximizing the profitability of current operations. This is about making systems smarter, not just cutting costs. Technology is the main tool. A CAD/CAM system is a profitability machine, driving same-day restorations that increase case acceptance. The same principle applies to your front office. Automating insurance claims speeds up payments and frees staff for revenue-generating tasks. On the cost side, you must be proactive. Annually bid out your top 5 expenses, from supplies to lab fees. A 5% reduction drops to profit. Finally, your fee schedule is not static. It must be updated annually. This gives you power when renegotiating insurance contracts for fair pay. So, how do you boost revenue with no new patients? You bill medical insurance for procedures you already do. This is a hidden revenue stream. You have now optimized taxes and supercharged profitability. The next question is how you convert high income into lasting wealth. The biggest threat is lifestyle creep when spending rises with income. The rule: your lifestyle growth must be slower than your income growth. Next, your practice cannot be your only asset. That's too much risk. Systematically move money into stocks, real estate, and other businesses. And the practice itself is an asset to be grown. Predictable revenue and strong systems directly increase its final sale price. Now let's revisit retirement. For high-earning dentists, a 401k is just the beginning. This is where advanced strategies come into play. The Defined Benefit Cash Balance Plan is like a pension you create for yourself. It allows for huge, pre-tax contributions, often over $200,000 a year. This is especially powerful for dentists later in their careers who need to supercharge retirement savings, creating a large tax deduction today. Even your approach to debt must be strategic. Aggressively paying down student loans might starve you of cash for a practice acquisition. But this entire financial engine can be destroyed if you do not have the right guardrails in place. Silent threats can undermine everything. Recall the technology for efficiency? That investment in a CAD/CAM system builds a predictable system that boosts your practice's final sale price. The first threat is internal. Disorganized bookkeeping is an open door for error and even theft. Regular personal oversight of finances is non-negotiable. The second threat is external. Insurance fraud. It can be unintentional, like waiving co-pays, but penalties can be severe. Vigilance is defense. Ultimately, this entire blueprint, the tax savings, the efficiency, the wealth, is built on a foundation of excellent patient care. So let's bring it all together. The blueprint is clear. First, you architect your finances for tax reduction. Second, you engineer for maximum profit. These are not just a list of tips. They are interlocking parts of a single, powerful financial machine. The results are exponential. This is the shift. From viewing your practice as a job that pays well, to seeing it as the engine for building financial freedom. Your first step is simple. Schedule a meeting with your CPA and ask one question. Are we building a plan or just filing taxes?